Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates. 10-year note yields off their highs from last Friday. Recall we touched 240, a level we've touched a few times over the last few months, and we've been unable to push through it. And we've really pulled back, significantly this week over the first 4 days. So we've seen yields touch 240. Now we're getting closer to 230. And it seems to me, technically speaking, we've seen more bond buyers in there. There's not a whole lot. It hasn't been a huge amount of data. Obviously, we have a big data point tomorrow. But right now, we're seeing yields pull back significantly after a strong rise. And volatility, while we have seen a reversal in the trend, we haven't seen that move higher in volatility that you'd expect. Volatility still hovering well below historical norms and looks like it's going to continue to do so regardless of what we hear coming out of the geopolitical risk column or whether we hear coming out of the Fed column. So right now, volatility is low. Yields are trending lower. And what do we have? Well, we have CPI tomorrow. CPI has been on the Fed's radar for some time, but we really heard about that at the Fed minutes from September. They talked about inflation being the key here as to how aggressively they're going to address rates. And I think that this number could be skewed a little bit due to the hurricanes. But if it comes in strong, it's going to be a tip to the cap to the Fed because they've been talking about stronger inflation. If it's not, they're going to probably push it off and say, we need to wait until October. So right now, I think treasuries are we're seeing a setup for a strong CPI number, and positioning in treasuries is such that we're seeing more bears come into the market. However, the trade of pain in treasuries, which it has been for some time, is lower rates. And I think that right now, lower yields are going to probably win tomorrow going into the weekend, especially if there's any geopolitical ado in the air. So right now, we are seeing yields pull back. We are seeing volatility lower. We do have CPI. We do have earnings, which will also kind of give us a little bit of effect, especially the bank earnings, which came in stronger this morning. So I think right now the trade of pain is going to be for lower yields, and that's probably how we're going to set up for the weekend. Don't forget, we are still awaiting a Fed chair nominee that could change all this, that will inject the market with some volatility. At least that is a hope trade of mine, but we'll have to wait until next week. That's hopefully when we'll get that. This has been Todd Colvin coming to you from the floor of the CME Group.